In less than 3 years, a company with 10 employees and 0 external capital have built what I think is the most exciting and probably fastest growing crypto exchange in the world.
The only token in the top 10 tokens that has not been around for a decade is Hype. How did it get in the top 10? Because of the explosive growth, the success, the cash generation, the buyback program. All of these things mean this price has real appreciation ahead of it.
We are solving a scarcity problem by making this easily accessible through our digital asset treasury company that will be publicly listed on the NASDAQ.
The fastest growing token that is yield generating, that is part of the ecosystem with an incredible revenue generation, stealing market share from everyone. This is a very, very, very exciting investment.
This episode is brought to you by VanEck Semiconductor ETFs. You'll hear more about the VanEck Semiconductor ETF, ticker SMH, the largest semiconductor ETF, and its newer VanEck Fabless Semiconductor ETF, ticker SMHX, later in the show. The Blockworks Digital Asset Summit, crypto's premier institutional event, is back in London this October 13th to 15th. You've got top speakers from BlackRock, Circle, Coinbase, the UK Parliament, and Athena, all under one roof. I'll be there as well, hosting a live forward guidance episode with Quinn and a few others. So if you want to see us record in the flesh or meet some of the other legends from the forward guidance community, this is your shot. Notable macro names like Michael Howell of Cross Border Capital and Jeff Park are already confirmed, with more coming. There's also a VIP dinner on the 13th that will sell out fast. That's for speakers and VIP ticket holders only. It's at Old Billingsgate in London. Use code FORWARD100 for £100 off. See you there. All right, everybody, welcome back to another episode of Forward Guidance. And today I have a very special episode. I have the distinct pleasure to be joined today by Bob Diamond, former CEO of Barclays, as well as the founder and CEO of Atlas, as well as David Schamis, who's also CIO and co-founder of Atlas. And the two of you guys have a very fascinating situation that you have going on right now, where you've started to announce Hyperliquid Strategies, Inc., a new treasury vehicle company that is planning to purchase Hyperliquid. And that's a very, very fascinating narrative to see. I've been interviewing a lot of folks on the show recently that have been going through this transition from the TradFi world, from the macro world, and starting to be a lot more observant and active participants in the digital asset world. So very honored to have both of you here. Pleasure to have you.
Great to be here, Felix.
Nice to be here.
Yeah, super excited. So for those that aren't aware of both of your backgrounds and how you ended up working towards developing a digital asset treasury company, I would love to hear about that journey, because it's something that I've been hearing a lot about and seeing a lot more people that, I don't know if you were both skeptics at one point in your career and then made that conversion, or just always been a believer, but I would just love to hear about that story of going from the TradFi world that you both represented and where you're at today.
There's no question we're both have been and continue to be TradFi people. We've both grown up in the financial services world. Our business, Atlas Merchant Capital, is a private equity firm almost exclusively focused on investing in financial services businesses. We both started in sort of the investment banking world in different ways, but it's impossible not to have gotten exposure to crypto over the years. I think in 2015, I bought my first Bitcoin. I did it in a Coinbase account that I still have. I should have bought more, like a lot of us. A couple of years later, Bob and I were on CNBC after we announced the deal that had nothing to do with crypto. It was an insurance deal. And of course, by 2017, that's all they wanted to talk about on CNBC, and they asked us what we thought about it. And I actually said, I'm pretty skeptical, but having a 0.5% or 1% of your net worth in Bitcoin is probably not a terrible idea. At the time, I was kind of laughed at a little bit on the show. And in retrospect, we all should have put a lot more than 1% of our net worth in. So I would say Bob can speak for himself, of course. Maybe, Bob, you can talk about Circle for a minute. But we've both been, I think, healthily crypto skeptical over the years. But it doesn't mean we were anti-crypto. As a matter of fact, again, I owned some Bitcoin, and we've done now 2 crypto deals over the years. And every investment we make and everything we've done over the years and everything I've done from the beginning, I've been skeptical over. So being skeptical does not mean being anti, in my opinion.
Felix, in my case, it's been an interesting journey. I joined Morgan Stanley in the early 1980s. It was still a private firm. Like David at Solomon Brothers, I started at Morgan Stanley in the IT department. So I've always had a tech background, but it was much more around tech, how to process trades, in the very, very early days of firms like Morgan Stanley, growing from an advisory business into one of sales and trading. So very similar to the position that crypto has been in over the last decade. My first job in the front office in trading was in repo. And again, in repo, the short end of the curve, you really got real exposure to how trades settled, how they processed, how they were financed. And so I've always had a very strong background in the underpinnings of financial services technology and kind of front office, back office. In Atlas Merchant Capital, we were early investors in Circle. Our original intent was 2021 to de-SPAC Circle. I think David and I feel good about our vision that we could see what was going to happen with stablecoins. That process where we ended up not getting the SPAC approved by really what we've all seen is the attitude of Gary Gensler and the SEC against crypto, negative on crypto. No matter how good the idea was for the democratization of finance. And I think Gary Gensler will go down in history as having been so backward that his intent, which was to include more people in financial services, he did exactly the opposite. But what happened during that time, Felix, is both David and I learned a lot about blockchain. And again, it goes back to our origin is understanding financing, technology, processing. And blockchain is an incredible technology. And both of us believe that 10 years from today, we'll see that as the underpinning of the infrastructure of even, the convergence of new and existing financial services. And we also learned a lot about stablecoins, the digitization of currencies, the democratization of finance, the removal of that middle person and that middle bank to make things 24/7, instantaneous, and much less expensive than they are in the world of large financial services today. Since that time, David and I have probably seen 200 opportunities in what we would call broadly crypto. And the first one that we've acted on was Hype and Hyperliquid. And it says a lot about the opportunity that we see there. And, you look at the opportunity in the exchange and the token. If you look at the opportunity where of the top 10 tokens, the only one that's been around less than a decade is Hype. An exchange like Hyperliquid, which is unbelievable, showing unbelievable growth in both spot trading, but it really dominates perp trading today. So we're very, very excited. I'm probably going on way too long from the original question, but that was the background. And I think, if we had a vision for Atlas Merchant Capital, it would be, we're referred to by many of the people we're doing business with right now as the suits. We don't want to be the suits. We want to be in the middle, in the intersection. And I think we're getting there quickly. We really are enjoying. And when you invest, as you're really, you're putting your money where your mouth is. So you have to really study, really analyze. And the two of us, WhatsApp each other at midnight some nights, and we're both, reading new things about the advantages of Hyperliquid.
Yeah, I think at this point, the value proposition of Bitcoin has been well understood and established at this point. Everybody knows the quick quip of digital gold and where that sits within the macro context. But I think what's more interesting for this conversation, and you alluded to already with Hyperliquid, is some of the financial rail innovations that are occurring being powered by blockchain. And so one of them, of course, is what Hyperliquid represents, which is these decentralized on-chain perpetual exchanges. That there's some really interesting innovations just associated with that. There's also the stablecoins thing. And so I would love to just tap both of your experience from, working in repo and that sort of world, especially is What do you feel are some of the most compelling financial rail innovations, and why are they innovative? For somebody that, already trades in their traditional brokers, something like interactive brokers, and, they can already buy most equities that they're interested in. What are some of the compelling financial innovations in that respect that are relevant to them?
Yeah, look, I think specifically around Hyperliquid, some of the things, they've built a system in a short period of time, right? They've been around for less than 3 years. And they built a system that not only works well for them, right? We've seen their volumes go crazy. We've seen their fee revenue go crazy in a very positive way. But they built the system where others can build onto their system in a permissionless way. And that's just really interesting and really exciting and really different from like how traditional financial services works. So what do I mean by that? If somebody wanted to partner with JP Morgan, if I'll use an example, if E-Trade, before they were bought by Morgan Stanley, wanted to partner by JP Morgan, the CEOs have to get a meeting and they have to talk through it all, and there's weeks and maybe months of going back and forth on legal terms and business terms, and maybe it all gets up and running, and maybe it's a success, and maybe it's not. And there's just a huge inefficiency in all that. Hyperliquid built their system out for that kind of partnering, but in a permissionless way. So when I say permissionless, you don't have to call up Jeff Yan. You don't have to go to Singapore and have a meeting with him. You don't have to take him to lunch and convince him why you're great and others aren't. You got to take the way they've set up their code, you got to put it into your system. And next thing you know, you're doing business with Hyperliquid. So the best recent example of that is Phantom. Everyone knows the Phantom wallet. It's, I think, the top 1 or 2 wallets out there. They decided they wanted to start allowing their customers in the wallet to trade perps. They didn't have to go to Singapore and go be nice to Jeff and all that. They literally took some code that Jeff had set up, they put it into their system, and next thing you know, they're in the perp business. So just think how efficient that is versus what else is out there. And again, one small example of what you say about the rails doing more. I think another example is what is known in the Hyperliquid world as HIP-3. So HIP-3 is the ability for others to create their own perp exchanges using the Hyperliquid backbone. So in other words, you're not using their capital, but you're using their technology, again, in a permissionless way. You just loop into it, and instead of your startup or whatever that wants to get into the perps business and for some asset class, taking tens of millions or more dollars to build out the exchange, you're literally using their rails and you're built in right on it. And that makes so much sense to me. The most interesting one I've seen so far, at least being talked about in the HIP-3 world, is for pre-IPO equities being traded. So, for years, I've been one of these guys that have complained that I hate the IPO process, that investment banks, they're always pricing things for their buy-side clients and not for the company. And you see these big pops in the stock the day it starts trading. And on one hand, that feels good to everybody. Everyone loves when the stock goes up. But on the other hand, that's the seller, that's the IPOing company shareholders leaving money on the table. In Circle, which we just did, the stock IPO'd at $31 a share, and it popped. We all saw it pop really quickly. The idea that you can have pre-IPO companies, so companies that are not yet IPO'd, but trading in a perp market, allows for that price discovery, right? It's going to be a lot harder for the next Circle if it's trading in the pre-IPO market on like Ventuals, which is one of the guys trying to do this with HIP-3. If it's trading at $100 a share, it's going to be a lot harder for the investment banks to price it at $31 a share. And I think that's, it sounds like, oh, who cares? Some venture capital guys or some pre-IPO investors make a little more money. What does that really matter? But, if you take every venture capital firm, every one of their assumptions around exit, and you increase it by 25% across the board for every one of those firms, what do you think that does across the country or even across the world when it comes to new job creation, right? If every single venture deal that's getting done has a 25% pop in where the investor thinks they're getting out in the future, that allows them to invest at lower costs, to put in more capital, and that has like a real effect on the economy. Anyway, so those are like two small examples of how Hyperliquid specifically is using the sort of blockchain technology to make real changes in the near term in what we all consider to be traditional finance.
Breakthroughs begin with semiconductors. With over $23 billion in assets under management, the VanEck Semiconductor ETF, ticker SMH, is not only the largest semiconductor ETF, but it has also outperformed the next largest semiconductor ETF. It is built on an intelligently designed and constrained index that includes the whole sector stack, from design to manufacturing. Historically, this unique construction and methodology have helped SMH outperform its closest ETF competitor. Check out the table below. Go to vaneck.com/SMHFelix to learn more. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research. Bob, would you like to paint some color as well on some of the other innovations that are occurring? And I would also love to just hear a bit about, you mentioned perps in there a couple times already. And for those that don't know, that means perpetual swaps, which the closest distinction I've found in comparison to is something like a CFD of sorts, or like a future without the final delivery point. And I would love to just hear a bit about some of the reasons for that sort of derivative compared to some of the more established ones like options that we already have, or futures that have a specific delivery date associated with it. What is the compelling value proposition for that as a form factor for derivatives?
Look, as far as I understand it, Perps was sort of invented in the kind of late 80s, early 90s. I think, again, I've done some research on this by Bob Schiller from Yale. I went to Yale. I took his class actually in 1995. But I think he invented it, or it's been invented really initially to be able to do what I talked about a minute ago, which was create a market for things where there isn't necessarily an easily observable spot market. I think it's become popular in the last number of years for sort of the opposite, where there is a spot market, and it's obviously in crypto, whether it's Bitcoin or ETH or whatever token is being traded. But it's a very efficient way to trade, with leverage on the underlying. And the whole concept of the funding rate is actually quite ingenious. And for people that don't understand it, maybe I'll take a minute to explain. The perp will trade at either a slightly higher or slightly lower price generally to the spot price of an underlying asset. And what happens is, when the perp price is higher than the spot, the forward rate will be positive. What that means is the person going long has to actually pay a rate, and then the person on the other side of that trade going short actually gets paid that rate. So what happens is that forward rate, the funding rate, is sort of the referee to keep the perp price close to the spot price. And then when the perp price goes below the spot price, the funding rate goes negative. Therefore, you have to pay to be short, and you get paid to be long. And I think it's just a very efficient way. It's a derivative, but it's a very efficient derivative to use to trade in a lot of markets. And obviously, I think it was invented in the early 90s. It wasn't used much, as far as I know, in any serious way until the crypto world. I think Binance is obviously a big perp trader, and Hyperliquid really started itself with perps.
Felix, let me ask you, or touch on your first question there, which is around blockchain and kind of expanding more on our thinking there. In its very simplest sense, if we think of a significant cross-border, complex international transaction for banking today, maybe it is one of our investors in Singapore sending a capital call to Atlas Merchant Capital in New York for $1 billion. That's a huge amount of money, $1 billion. And when that happens, our client in Singapore goes to their bank there and says, we're going to send $1 billion. And that bank does KYC on Atlas Merchant Capital. They call our bank in New York. They arrange all that. And if the genesis of this was on a Monday, maybe Wednesday or Thursday sometime that transaction will happen. 3 or 4 days later, after all this work by two banks, and guess what? both of us are paying 2 to 3 points for the transaction, a ridiculous amount of money. Well, with blockchain, we need neither of those banks to attest to that transaction. Blockchain is the trusted source. And so when our client in Singapore wants to send that $1 billion, it's immediate, internet, frictionless, fast, and very, very efficient. Those 2 to 3 points times 2 are a very, very, very small spread because this is all done instantaneously over the blockchain. One of the things that's misunderstood is that the banks are resisting this. Well, that's true. For a decade, the banks have been pushing back because it's encroaching on their fees. I will tell you today, the largest banks like JP Morgan and B of A are spending billions investing in blockchain technology. Jamie Dimon has been very open that they use blockchain in many areas throughout JP Morgan. And I would say that any bank that today is not adopting and adapting will be left behind 10 years from today. So this technology will be adopted by the financial institutions that have resisted it for so long, for obvious reasons, right? It was cutting into their most profitable business. But it's just so logical when you walk through an example of why blockchain is going to be the winning technology. It democratizes and gives so much more self-sufficiency to the actors in the market and takes that power away from the middle person, which has been the large global banks.
Bob, I'd love to double click on a couple points there that you made. And I think there's this important distinction between public permissionless blockchains such as like Hyperliquid or Ethereum that you hear about, and then also these internal sort of private blockchains like that JP Morgan has already been using for a few years now. And we're starting to see this emergence of more what I would just simply let's call them corporate blockchains, and compare that and contrast it to some of these public permissionless ones. How are you seeing the distinction between how they decide which path to take there? Because it seems like it's sort of a fork in the road in some ways. Or do you not view it that way?
Yeah, I would say, I got to tell you, I speaking of myself, I think I'm of two minds here. On the one hand, two of the companies we invested in, or we have exposure to, Circle and obviously Hyperliquid. Hyperliquid started out with its own L1 blockchain, and Circle announced in their last earnings announcement that they're going to build one of their own. And on one hand, I completely understand why they have their own. Circle made the point that when people have problems with a transaction or whatever, it's very hard for them to go in and audit it or whatever on someone else's blockchain. So on one hand, I get that, and obviously Hyperliquid built their own L1 to begin with, which I think in a lot of ways is part of the beauty of it and part of what you need to enable the things I talked about before. On the other hand, I have to say it's worrisome that we may end up in a world where every one of these crypto companies has their own L1 blockchain, which to me isn't all that different to the world we just came from, where JP Morgan has their own credit card rails and B of A has their own credit card rails, and it's a different technology, but sort of the same outcome. So I think we are at a crossroads with this. I think it's going to be really interesting to see what happens. I think Hyperliquid's a good example of someone creating their own L1 that adds to the sort of crypto ecosystem and makes it kind of better for everybody. I'm sure as more people do it, that won't always be true. And hopefully, I'm being hopeful here, the market will help decide these things. I don't think it's going to be a government coming in and saying that one's okay and that one's not. The market's going to decide by doing business with one that they think is done right and not doing business with another that's not done right. But that might be a shred of wishful thinking here, I think.
Yeah, just to add on that, I think what's clear to us is there won't be one winner. There will be few, not many. And I think the competitive nature of this is, will be a success factor. If you evolve from blockchain to stablecoin, one of the values of USDC and Circle is that it is available to everyone. If JP Morgan has their own stablecoin just for their customers, it can't be used as broadly. So maybe there are some use cases within one bank for a stablecoin or a blockchain for a specific use, But as you get into the larger market, I think the winners won't be one. They will be few, though. They won't be many.
Yeah, I do worry that, guys are sitting in a JP Morgan boardroom right now saying, of course, everybody shouldn't have their own blockchain. Everybody shouldn't have their own stable coin, but we should because we're JP Morgan, which is not unreasonable, actually, because they are JP Morgan. But then Wells Fargo says the same thing, and then B of A says the same thing. And, next thing we know how that could end up. But I do think the market will
First Bank of Roanoke, and then they have theirs, right? So
exactly. All right. Okay. So with all that established, let's dive deeper into what both are you doing now with Hyperliquid strategies and what's going on there. So as we already talked about, Hyperliquid exists. It's a permissionless DEX perp that's available today, and there's a token associated with it that drives it that has a whole bunch of other compelling points that we can talk to. But before we get into that, obviously people can go and buy that token hypothetically, but you guys are coming forth with a digital asset treasury company. There's a lot of different names for what that associates with, but that's the way I define them. And effectively, they serve as a reserve for these tokens where either they can issue shares, and if it's accretive for investors, they can go and buy the token. So would love to just hear a bit about why you both decided to get into this in terms of the specific mechanics associated with this. You're launching this, as I understand it, in partnership with Paradigm and a few other partners, but would love to just hear specifically about what's the plan and value proposition associated with this.
Yeah, look, I would say that a couple things. One, for anyone who has followed Hyperliquid, and it's not a lot of people, it's sort of amazing to me still how few people, even people who consider themselves to be very knowledgeable in the crypto world, how few people really understand what's gone on here in the last 3 years, right? In less than 3 years, a company with 10 employees and zero external capital, no VC money, no private equity money, zero external capital, 10 employees sitting in Singapore, have built what I think is the most exciting and probably fastest growing crypto exchange in the world that right now is free cash flowing, call it between $1 billion and $1.5 billion a year on an annualized basis. Like that right there is a pretty amazing feat. Secondly, we think the structure they came up with for their token is really interesting. They did an airdrop 9 or 10 months ago. And what they said was they would use the vast majority of their free cash flow to buy back that token. I believe today, the free cash flow buyback rate is something like 99%, might be exactly 99%. And what's also great about it is it's happening every single day. It's happening automatically in the protocol. So, a regular company, they generate earnings, they have a board meeting, the board sits around and decides, do we want to use those earnings to buy back stock, or do we want to pay a dividend, or maybe we want to build a new headquarters building, or maybe we want to buy our CEO a new plane, or maybe we want to pay people more. Like, there's a lot of things they can do with that money. Here, it's pretty locked in. 99% of free cash flow right now is going to buy back the token. So we think that's all really interesting and really creative and very new. You casually mentioned, Felix, that anyone can just go buy the token. You casually mentioned that sitting in Vancouver right now. For all the rest of us sitting in the United States, it isn't so easy. As people may or may not know, the Hyperliquid exchange, which is really the main place where Hype is traded, the Hyperliquid exchange is not available in the United States. If you go to it in the United States, you'll see a big, ugly red bar on top that says you're in a location that's not able to access the token or access the exchange. So for a lot of people, for a pretty big percentage of the investing world and the crypto investing world, it's not so easy to buy the token in the United States. We can debate. I actually enjoy the debate about whether DATs should exist and whether they create value that couldn't be created on their own. I think they do, but I can frankly argue either side of that one. There's the real need to. We are solving a scarcity problem for a very large percentage of the investing world by making this easily accessible through our digital asset treasury company that will be publicly listed on the NASDAQ for people that can't easily do it.
This is a very efficient way to get exposure. This is also the only way for many people to get the exposure. But I think both of those things are important. And then the third thing I'd say is that both David and I recognize that, wow, what an opportunity here for the investors because of the explosive growth of Hyperliquid and Hype. And again, think about that. The only token in the top 10 tokens that has not been around for a decade is Hype. How did it get in the top 10? Because of the explosive growth, the success, the cash generation, the buyback program. All of these things mean this price has real appreciation ahead of it. And so the opportunity for this equity investment to grow is significant. This isn't just buying a bar of gold and putting in a public listing. It's very, very different with huge opportunity. And that's what got David and I so excited.
Yeah, the other thing I would say, Felix, I mean, you're clearly well in the crypto world. And I think most people probably listening to this podcast consider themselves to be pretty crypto aware or crypto native, et cetera. But there are still plenty of people, serious investors with serious money. I was literally having a conversation with someone over the weekend who he said, I probably should buy some Bitcoin. I never have. What do you think? I said, of course you should. We just debated how much. And he said, yeah, I'm just going to buy, the BlackRock ETF or one of those things. And I said, that's perfectly fine. But open a Coinbase account and buy some Bitcoin directly. You're a big boy and you should get the full experience. Anyone, you have a brokerage account. It's easy to buy ETFs, but take the extra 5 minutes. And so the point I'm making is there's still a very large percentage of the world out there that find opening a Coinbase account and buying some Bitcoin directly to be weird and not what they're used to doing. So, to invest in our company, invest in Hyperliquid Strategies, you won't have to open a Coinbase account. You can go on your own brokerage account and buy the ticket.
Providing access to the fastest growing token that is yield generating, that is part of the ecosystem with an incredible revenue generation, stealing market share from everyone. This is a very, very, very exciting investment. We'll see. I think the proof is in the pudding, but we're very excited about seeing this grow. And, I think that's why we had the investors that we had with D1, with Paradigm, with 683 Capital, so many people who have so many different opportunities in this space and so much knowledge in this space. And $888 million of value day one is a serious commitment to the strategy. It's not $1 million or $5 million or $10 million. It's almost $900 billion from day one.
Million, but we're on our way.
What did I say? Did I say $1 billion? I let that B word slip, David.
We'll get there eventually, but not yet.
I was talking about the forward.
There you go. Using a similar philosophy to SMH, the VanEck Fabless Semiconductor ETF, ticker SMHX, goes even deeper, exclusively investing in fabless semiconductor innovators designing AI infrastructure behind the scenes. We're talking high bandwidth memory, power management chips, custom accelerators, and ultra-fast interconnects, the critical components that make large AI models run faster, smarter, and more efficiently. Go to vaneck.com/SMHXFelix to learn more. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research. Guys, there's an interesting insight in there that I think is going a little understated, and I want to elevate here, which is just the simple fact of a token that is generating revenues and that there's a buyback mechanism. And there's an actual, you mentioned this idea of free cash flow. I don't think those words have been used to describe a blockchain almost ever before this point now, which I think is really important for, one of the most valid criticisms I've seen over the years for digital assets and crypto is that, okay, well, there's no claim on cash flows. There's no cash flows associated with this. So how do I run a DCF? And okay, well, now we're at this situation where we have a project that is forging this path here where there actually is a very significant fee generation, free cash flow growth, as you said, and there's a significant buyback associated with it. So I'd just love for you to just, paint some color around just how unique that is and where you think that represents how the industry is going to head from here on out.
Yeah, look, I think part of the reason guys like Paradigm wanted us to be in this transaction with them is that relative to other tokens, as you said, Felix, you can do what I'd call some traditional financial analysis here and look at metrics like EV to price to free cash flow and EV to earnings and the things that people look at. And that's the second leg that we haven't talked much about yet, but it's probably implied. The numbers on Hyperliquid, the crypto area these days is certainly known for high growth, but it's not really known for compelling and reasonable valuations. But when you look at where the token is trading today, it's a pretty compelling valuation. It's not sky high. It's not even where near like Coinbase's multiple. And there's reasons for it, right? One reason is what we've been talking about, which is that it's not easily accessible in the United States. It's a pretty big reason. Another reason is that it's a token. As I talked about before, there's still plenty of people that aren't accustomed to invest in that way. So there's some good reasons why that's the case. But for guys like us, like we are generally value style investors. We're not a venture capital firm. We don't generally invest in things at 100 times revenue and infinity times earnings. That's not really our style. It's not what I've been doing for years. As I said before, we're pretty skeptical investors all the time. And this one, we had to scratch the surface a bunch of times to really dig in and convince ourselves that this is real. But it's real. High growth, compelling valuation, solving scarcity. Like it's a lot of things. You don't necessarily need all three of those things to make an investment worthwhile and worth doing. That's what we think is so interesting here.
What's your view on where the industry as a whole will head? Do you think, we will start to see protocols and companies that actually have this sort of free cash flow growth become fairly, or more premiumly valued versus ones that don't? Or do you see both worlds still living in tandem?
Let me just say before David gives you some very, very good data points on just that question, that we are operating in a macro environment where we have an incredibly supportive political and regulatory environment. We did not have that, prior to the last 6 or 9 months. We have an acceleration, real acceleration in retail adoption. But to me, what's more important as more a traditional finance person is we have a real acceleration in institutional adoption. And I think it's like top of the first inning in institutional adoption. It's maybe second or third inning in retail adoption. But it's really, really early. And when you think about that, and you're hearing people today, lastly, I'd say you're hearing people today talk about blockchain in a way that's very, very different than kind of the skepticism around crypto and what's going on and what is this, and Gary Gensler saying no to everything, and this could be dangerous for people. And now you have Jamie Dimon saying blockchain is fantastic technology. We use it all over JP Morgan. This is going to be part of the future. That is very different. So a hugely supportive political and regulatory environment, a serious acceleration both in retail and, to me, importantly, institutional, and a convergence that blockchain is real and it's innovative and it's going to be the future. That changes the macro environment so much, Felix. That's so exciting.
Look, if you go out long enough, all technologies converge eventually. But I don't think we're going to wake up anytime soon and see lots of regular companies issuing securities or whatever, in tokenized form rather than in normal securities form. I think Hyperliquid is it's an exception. It's quite different. Again, 3 years old, less than 3 years old, no external capital. That's not how over $1 billion of free cash flow. That is not the normal profile of almost any company out there. Look, we have to be careful also when we talk about new technologies that we're not solving problems that don't exist, right? Generally speaking, the currently functioning equities markets that we have all over the world, you can raise a lot of money and trade a lot of volume on the equities markets right now, right? It's not like anyone ever looks at the New York Stock Exchange or NASDAQ and say, there's not enough liquidity here for me. We have a problem. We got to figure something else out. So again, if we go out long enough, we may have all this stuff. But I personally am not predicting that you're going to be trading Citigroup shares in tokenized form, issued directly by Citigroup anytime soon. Because again, I think that would be solving a problem they don't currently have. Whether people do derivatives off that in different ways and figuring out ways to trade derivatives of equities on chain, like that's awfully interesting, and that could happen. But I'm not sure I think Hyperliquid's going to be, I don't know about a unicorn, but it's going to be unique for a while, I think.
That point about not just trying to solve problems for problems that don't actually quite exist, I think is really important. And I think that's a nice pivot into just rounding out this conversation in terms of contrasting, going with the 20,000 foot view in terms of the macro situation that we're in this modern day and age, which I would characterize as one of the great questions of our time right now, which is who's going to buy all the debt, and especially, treasury debt, U.S. treasury debt. That's one of the great questions of this day and age right now. And we've seen some compelling hints that perhaps stablecoins will be one of these key unlocks. And I'm curious how you both think about where does, using that as a pivot point in terms of stablecoins, but you can take that in any direction you'd like as well. How do you see some of these innovations we've talked about start to sit within some of these big macro questions of this day and age?
Listen, I think the macro question you touch on is the debt levels in the U.S. primarily, and that is the dark cloud sitting out there. For those of you that have, students of kind of the talking heads on TV, I've been a part of it on CNBC and Bloomberg, and I've been saying since COVID that let's just temper all this fiscal and monetary stimulus with the debt levels. Until recently, everyone's been ignoring them, but since the first Trump administration to today, Trump, Biden, Trump again, so bipartisan. We've more than doubled the outstanding debt of this country, and you can't tell me this was a terrible economic environment. It was pretty good, I would have said. So we have a real challenge. Will innovations in finance be a positive? Absolutely. Will the weaker dollar, which is down 20% over the last couple of months, make it even more expensive? Absolutely. So I think separate from all the things we're talking about today, and stable coins, you're right, will help with financing the debt and lower the interest rate. But we can't just deal with at the margin, the rate, and kind of the liquidity and those issues. We also have to deal with the fact that we've had every administration since Bill Clinton has increased the outstanding debt of the United States. The wealthiest, most innovative country in the world, and doubling the outstanding debt in the last, 2 administrations. Unacceptable and needs to be dealt with. I didn't give you a solution, but I think there are solutions there, but it starts with a desire to recognize that this is the dark cloud.
Yeah, I got to say, I think thinking that stable coins are going to solve the U.S. debt problem seems, highly optimistic to me, right? Like anyone who has $1 in USDC today, likely before they had that USDC, they had a dollar deposit in a bank, or they had a money market account in a brokerage firm, and those deposits and money markets were going somewhere, and the money market was probably directly buying U.S. debt. So, maybe you can make an argument that if more of the world moves to the dollar because they're putting their money into USDC or USDT instead of in their local currency, that'll help on the margin. But it's not exactly a new idea to say the U.S. dollar might be the reserve currency for the world. If anything, people are worried about it going the other direction. So, I'm going to go back to my normal skeptical self now. I think it's highly optimistic to think we're going to solve at least the U.S. debt problem because, people are going to have money sitting in stablecoin.
Yeah, I think that's a very, very reasonable take, and definitely agree with the vast majority of it. Guys, really awesome to have you on the show and explain this. I think it really represents the zeitgeist of this day and age, which is just seeing these two worlds collide together. So absolute honor to have both of you on here. Would love to just, feel free to tell the crowd here where they can go to hear more about what you guys are up to.
Bob and I have both become pretty active on Twitter because, in the crypto world, you have to be active on Twitter. So you can find us both there talking about a lot of these things. Our website, atlasmerchantcapital.com. We have a news and other things we put out, whether it's us talking or different releases of ours, so you can find there. But, we're a private equity firm by definition. We're not super public, and, you got to chase us down to find the cool stuff we're talking about.
Well said. But worth the chase. Check us out on X.
Exactly.
There you go. Worth the chase.
Worth the chase.
Awesome. Yeah, love it. All right, guys. Well, thanks so much for joining the show. Really enjoyed that.
Good stuff, Felix. Thank you, man.